So with the interest rates remaining stable, what do you think is causing the uptick within the mortgage market right now?
If I go back like 10 or 15 years back, this market used to be like 10% mortgage and 90% cash.
What do you think is causing this change in terms of more and more buyers inclining towards mortgages, even though the rules have not really eased up, or have they eased up? That's causing this kind of a growth.
For the past 1.5 year, yes, the rates generally have been stable.
Are you seeing a lot of people trying to avail that kind of mortgage in terms of off-plan projects, or is this something which is like the results of it are still yet to be seen?
Now the list has been growing, and some of the mainstream private developers have been added to the list as well, where banks can accept the finance.
Welcome to another episode of the Rise Up podcast. Today we are going to talk about mortgages. We've got with us Haider Qureshi, CEO and founder of Amity Mortgages. Welcome, Heather.
Thank you. Thank you for having me.
So we are in August 2025 right now. A very interesting news came out today that in July, 4,000, if I'm not mistaken, 4,000
Yes.
mortgages were registered for the very first time in the Dubai real estate market. So tell us, how exactly has the mortgage market overall been so far in Dubai?
So it has been, and I think we on our previous podcast as well, we discussed a little bit about it. So mortgages in general, the trend of people buying property on mortgage has been increasing year on year. And just yet that you mentioned 4,000 loans in July, that is actually up 9% month on month compared to the previous month. So definitely the mortgage market is increasing for UAE. Rates are expected to come down. It was also in the news that US has reduced the rates over the past 1 year, and they are expected to reduce it further. And that will definitely impact the market in UAE as well, the interest rates.
So this is interesting, right? That the mortgage market has been increasing, but at the same time, I don't think the interest rates have fallen down yet. Our anticipation, of course, was, and I'm sure that was the same case with everyone, that the mortgage market would increase a bit more with the interest rates coming down in the UAE market. So with the interest rates remaining stable, what do you think is causing the uptick within the mortgage market right now?
See, I feel that this market is becoming more and more end user focused because of increasing rents. A lot of people are opting to buy their house. Um, if I go back like 10 or 15 years back, this market used to be like 10% mortgage and 90% cash. Right now, it's almost at about 60% transactions happening on the mortgage. So this kind of indicates a more of an end user market because mortgage buyers are normally, not always, but usually they are end users. So people are opting to buy their own homes. They want to live in those houses. They want to avoid paying big rents. As you know, I mean, rentals have been increasing over the past couple of years, and now this market has become really expensive when it comes to rents.
So that's a big change, yeah, going from 10% mortgage market to overall 60% mortgage market. Considering the fact that mortgages in the UAE market are still not that easy. It's not easy to get a commercial mortgage. There's not so many mortgage options upon land. Residents or non-residents still need to cough up a good percentage of down payment along with closing fee as well in order to do it. So what do you think is causing this change in terms of more and more buyers inclining towards mortgages, even though the rules have not really eased up, or have they eased up? That's causing this kind of a growth.
So first about the interest rate you mentioned, they have been stable, right? For the past 1.5 year, yes, the rates generally have been stable, uh, but they have been lower than the Western world. For example, US, the rates have been higher than UAE. UAE has dropped rates a little bit in anticipation of this drop, but after that time, like when they dropped to around 4% level, which is currently for salaried individuals, those rates have been stable for the past 1.5 years. But given that US is considering a drop in rates, the rates are expected to come down. Now, coming to your point, why people are choosing more and more in terms of the mortgage, is that in terms of residence, the down payment is not that big. Banks can go up to 80 or even 85 if you are a UAE national in terms of loan to value. That means you have to bring in 15 to 20% as a down payment, which is not that big. It's more or less in line with the international markets. Yes, when it comes to non-residents, that down payment becomes quite big, anywhere starting 25 going all the way up to 40%. that they have to bring in. And of course, keep in mind, as previously banks were doing, partly financing the related costs, the related closing costs, which is not the case anymore. So now that 6-7% has to come from the client's pocket as well. So when we say it's 20% for a expat resident, it's 20% plus that 6-7%. So they have to bring in that. But considering they are paying a lot of big payments in terms of the rental cost, the residents are the buyers are basically willing to pay that cost.
So continuing on the conversation about non-residents, are you seeing a lot of non-residents come into the market and taking mortgages, or are you predominantly seeing residents opting for mortgages over here?
So we have a good mix of residents and non-residents. And in fact, we are in the process of tying up with some of the companies, for example, who are based in UK or Canada, who are basically sending us clients who would be interested in the mortgage. And these market, when I say North America or UK, these markets predominantly work on mortgages, as you know. 90-95% of the transactions happen on mortgage. So these people are used to leveraging, and they want to kind of continue the same thing here in UAE if the option is available.
And most of the people or clients that you're seeing coming in with mortgages, are they more end users, or are they more investors looking at mortgages for rental income? Are they expecting some kind of capital gains and wanting to exit out of it? What's been the buyer category like within your set of clientele?
So when we talk about residents, it's a mix of both. Um, but when we talk about non-residents, it's mostly investors. But interestingly, what we have seen is that most of the investors are saying that when they're buying a property, although it's an investment property, but they eventually want to live in this. So they have the intention to move to Dubai. So a lot of our clients, I mean, they love Dubai. It's a great place to live. So they have this in mind that eventually they're going to retire, or in fact make a career move and come to Dubai.
Mm. And in terms of any kind of policy changes or policy shifts, what are we looking at? Have you seen some things that are changing over the last few months when it comes to bank policies or other things that the people who are tracking mortgages should be kept up to date with?
So in terms of policy changes, I would say under construction property has been a hot topic these days from mortgage perspective.
Mhm.
While other policies keep changing as well, but in terms of the under construction property, there has been some shift in policy. So banks are relaxing their criteria a little bit. While previously banks were looking at least 50% completion, and only a select few developers, which were mostly government backed and all, and large developers. Now they are adding more developers to the list where they can consider mortgage for under construction properties. And also they have dropped their threshold for completion from 50% to now, in some cases, 35 or 40%.
I think that's a very strong show of confidence in the off-plan market, because
Yeah.
traditionally Dubai as a market, or UAE broadly speaking as a market, has never really had too many options when it came to off-plan financing
Yeah, yeah.
through banks. Now that they are heavily investing into it, or now that they're heavily promoting it, are you seeing a lot of people trying to avail that kind of mortgage in terms of off-plan projects, or is this something which is like the results of it are still yet to be seen?
So we have seen some positive movement in that sense. A lot of our the real estate companies that work with us, including Rise Up, have shown a lot of interest in these because of these changes. Because earlier it was, like I said, only a select few developers, but now the list has been growing, and some of the mainstream private developers have been added to the list as well, where banks can accept to finance those properties. So yes, definitely there is more interest towards under construction financing.
You said previously that over the last 10 to 15 years, 90% of the property buyers have been cash and 10% mortgage, right? That probably means that a lot of people who are holding on to their properties over the last 10, 15 odd years have 100% equity deployed or stuck within their own property. Are there a lot of solutions for these kind of investors that they can now look at mortgages? What exactly can they do in order to benefit from the lower mortgage rates that are there in the market and the higher rental yield that they are able to achieve on the property?
That's a great question, actually. So this applies to not only people who have purchased on cash, But even on mortgage, let's say 10 or 15 years back, they've taken a mortgage, and we all know that property prices have gone up significantly since then. So whether this property is on cash or whether they have a smaller loan amount, there are many options available for a equity release. So equity release is where if you have a property which is fully paid or maybe having a small loan, we can buy out this loan or simply do a equity release loan where you can encash some of the money out of your property and use it for purchasing of another real estate. Maybe if you want to renovate your property, you can choose to do that as well.
Do a lot of people do that though?
So not in many cases, it's mostly to purchase another real estate rather than renovating the property. But yes, equity release is a very common thing which is happening, and a lot of people are taking benefit of this.
Is it easy to get it done?
Absolutely, yeah. It's the same as any other mortgage. If you're buying a new property, it's the process is same. The eligibility criteria are same. The loan to value is same. As long as you're releasing that equity for one of the two reasons, one being purchasing another property where the funds are going directly to the seller or a developer in case of an off-plan purchase, and in case of a renovation, it's going to the contractor. Although some banks may release a smaller amount into your account as well, but in most cases, the equity release, the released equity that you get goes to that third party.
Excellent. There's also been a lot of talk about a new initiative that's been launched in terms of first-time home buyers. I believe we all know that there's been a lot of introduction of new developers in terms of specific inventory being allocated to first-time home buyers, certain discounts being placed for first-time home buyers. So that's in regards to the real estate transactions. But when it comes down to mortgages, there's also been some kind of benefits that first-time home buyers can avail in terms of mortgages. Can you tell us a bit more about what exactly they are?
So that's a very recent news, and we understand a few banks have already participated in this initiative. But so far, we are still waiting to hear from them in terms of what offers are there in terms of financing. Like you said, from real estate side, yes, certain discounts, some access to the inventory is there, but from banks' perspective, we are still waiting to hear from them what kind of offers are there.
Any expectation that you have or any anticipation that you have what they could be?
I mean, there are a few things. I mean, one is a loan to value, but loan to value is kind of governed by central bank. So I'm not sure if that's going to change. Maybe there could be some offers in terms of better pricing, which means better interest rate offered to the first home buyers by these banks who are participating. Other than that, I can't think of because see, like I said, most of these things, for example, the maximum loan term, which is 25 years. Then we talk about the fee financing. All these things are generally governed by the central bank. So unless central bank eases those rules, the banks are not permitted to offer those things. But yes, on the interest rate side, we are expecting some benefits to first-time home buyers.
So in terms of the interest rate, this is going to be my one of the last topics that we're going to speak about. In terms of interest rate, there's also been a lot of talk about reduction. I believe since the start of 2025, there's been a talk about reduction, but no one really knows where it's headed, right? Do you anticipate them to reduce in the short run, or do you also feel there's an opportunity for them to remain stable or even go higher for that matter, considering that there hasn't been any significant reduction as we were all expecting it to take place?
So if you go back 3 or 4 years, the rates were being fixed as low as at 2.5%. I mean, those were not normal times. We are talking about the COVID era. And the rates in general in North America were quite low, and they were low here as well. Now, as we were discussing earlier, there has been some discussions at the government level in US between the government and the US Fed. That's what we are hearing from the news, that discussions are ongoing in terms of reducing the rates. So after US increased, US Fed increased the interest rates about 11 times in 2022, they haven't reduced the rates as much. In past 1 year, maybe a reduction of 1% has happened so far.
11 times in 1 year, the rates were reduced.
Yeah,
Every
increased.
month, increased
In 2022.
11 times they were increased in 2022.
Yes. So right after the COVID, when things were getting normalized.
That's one increase every month.
Kind of, yes. So after that, we haven't seen much
So
reduction.
do you expect it to go back to what it was before? Are we expecting 11 reductions? Are we looking at slightly lesser than that? I mean, what's the expectation right now?
I think it would not go to the COVID levels because obviously the rates were reduced to kind of stimulate the market a little bit because the market was struggling due to obvious reasons. It may not go down to that level, but the expectation is that it should reduce.
Okay, let me leave you with one final question, and I think this is kind of applicable to anyone watching out there who's probably considering a mortgage purchase in Dubai. Uh, would it be wise to wait and watch and look for the interest rates to go down and then enter and get your mortgage for any kind of property in Dubai, or is it still practical and sensible to do it right now with the anticipation of the rates going down?
See, if you think again, it's the forecasts for our clients right now, and we are sitting in August of 2025. We are recommending people to go for a 2 or 3 years fix at the moment. And the reason is that we are expecting in the next couple of years for the US Fed to reduce the rate. They will reduce the rate, but not immediately. There will be some cuts in the coming review periods. So when the rates drop in the next couple of years, your fixed period will be coming to an end. And let's say if you're fixed for 2 or 3 years, at the end of 2 or 3 years, you will have the option to either go on a variable rate or fix for another period. And since we are expecting the rate reduction, that time would be ideal to fix it for another period. But again, this is based on the forecast. We don't know exactly where the rates will go. If somebody thinks that rates are gonna go drastically low immediately, they can always choose to go for a variable rate right now and take that advantage. But our recommendation is fixed for 2 or 3 years at least at the moment.
So your guesses are as good as ours and the viewers.
Yes, yes.
Excellent. For anyone watching out there, if they have any other queries in terms of mortgages in Dubai, where the market is headed, what are the basic requirements, whatever it may be, do reach out to us, and I'm sure the team at AMD Mortgages would be more than happy to answer any of your queries whatsoever.
Absolutely.
Thank you, Haider, for coming on and giving us a lowdown on exactly what's happening with the mortgage market. We should do this again soon and see exactly what kind of changes have been brought about or are our expectations and predictions along in line with it. But thank you for having.
No, thank you so much, Aakarshan.
Pleasure.
Thank you.